All right, welcome to the Explainer. Today we're going to peel back the layers on DMI Finance, one of India's fastest growing and honestly most interesting digital lenders.
I mean, in just a few short years, DMI Finance has completely taken off. We are talking about serving over 2 crore people across India. Yeah, you heard that right. That's 20 million customers. It's just a massive number, no matter how you slice it.
So the big question is, right? How does a company like this grow that fast? And maybe more importantly, what's lurking beneath the surface? What are the hidden risks that come with that kind of crazy growth? In this explainer, we're going to dig into the engine behind DMI and see if we can find the potential cracks. Okay, so first up, let's set the stage. To really get what's happening with DMI, you have to appreciate the sheer scale of India's digital lending boom. It is a massive wave, and DMI is riding right at the crest of it. And wow, this chart really tells the story. Just look at these numbers. Over 5 million app downloads, that's the front door. That's what funnels into that huge 2 crore customer base stretching across 28 states. We're talking about some serious digital reach here. It's pretty incredible. Okay, so what's actually under the hood here? What's the business model that's making all of this happen? Let's dive into that. What's interesting is DMI Finance isn't some fly-by-night startup. They've actually been around since 2008. They're the main company in the DMI group, and this is key. It operates as a registered NBFC.
Now, that term, NBFC, you're going to hear it a lot. It stands for non-banking financial company. So, what does that actually mean? Well, think of it this way. They do a lot of bank-like stuff, but they don't have a full banking license. But, and this is super important, they are absolutely regulated by the Reserve Bank of India, the RBI. So they're not just some Wild West operation.
So what are they actually selling? Their model is pretty focused, which is smart. You've got your standard personal loans. Then there are MSME loans. That's for all the small and medium-sized businesses that are really the engine of India's economy. And then, looking ahead, they're jumping into EV loans, for electric vehicle financing. Pretty forward-thinking. But, a sharp business model doesn't just erase the risks. In fact, for a company growing this fast, the risks can be even bigger. And that brings us to the regulatory red flags, which is a huge deal for any fintech company. And this is where things get really interesting. The regulator, the RBI, is always watching this space. They've stepped in before to put restrictions on NBFCs, especially when it comes to things like charging really high interest rates. So DMI is playing in a field where the referee can and will change the rules of the game at any moment. This really gets to the heart of the matter for all digital lenders, right? It's this constant tug of war. On one side, you've got this amazing convenience and speed. Getting a loan with a few taps on your phone. It's awesome. But the flip side of that coin? Well, the whole system is built on your personal data, which raises all sorts of privacy questions. And then there's the big one, the risk that people just can't pay the money back. And that leads us right into the central conflict of this whole story. Growth versus high risk. How on earth do you manage that balancing act? Yeah, it's a fascinating company to watch, for sure. But this idea of a double-edged sword is just perfect. Think about it. One edge is this incredibly sharp tool for rapid growth and reaching millions of people. The other edge, though, it's the risk. The risk that if you're not super careful, you could get cut. So let's just lay it all out on the table. The upside is pretty clear, right? They're tech-savvy, they're growing like crazy, and they're in a massive market with huge potential, especially with new things like EV financing. But then you look at the downside, and it's just as serious. They're under a huge regulatory microscope, competition is fierce, there's always the chance that credit risk could spike, and they're really at the mercy of bigger economic forces, like when interest rates go up. Okay, so we've gone through the business, the risks, the whole deal. But why should you care? What does the story of this one company actually mean for you? Let's break it down. Look, whether you're thinking of taking a loan or investing your money, you've got to see both sides. If you're a borrower, the deal is pretty straightforward. You get that speed and convenience, which is great, but you have to be really aware of what it's costing you and what personal data you're giving up. Now, if you're an investor, you've got to be a detective. You're watching the numbers like a hawk. Is their loan book, the total amount they've lent out, growing in a smart way? Are defaults, what the pros call NPLs or non-performing loans, under control? And the big one, are they playing by the RBI's rules? That is absolutely critical. When you step back, the story of DMI Finance is really the story of India's entire fintech boom in a nutshell. It's got all the excitement, all the potential, and all the danger. It's this incredible machine for growth and giving people access to finance, but it's running in a really high stakes game. So it leaves us with this one final question to think about. Is DMI Finance a true fintech success story in the making, or is it a massive high risk gamble?